Hi, I'm Steve Wiltshire, Executive Chairman at HoldenCAPITAL, and I'd like to talk to you about knowing when you can actually rely on a finance approval. The current lending market is a real challenge for property developers, even those who have significant experience, strong track record, and a good project in a desirable location. Often after lodging an application with a financier, the initial correspondence received can appear at first glance to be a formal offer. Just how reliable is that document? So, offers from lenders can take many different forms. So I'd like to look at a few examples in more detail. Indicative offer or term sheet. Typically, this will be the first correspondence issued by a lender in response to a loan application. It'll generally set out the lender's terms and conditions that the lender is prepared to consider the transaction on, including any special conditions and indicative pricing, and that includes interest and fees. A borrower needs to understand that this doesn't represent an unconditional approval and will typically include a number of disclaimers which actually confirm this. So depending on the lender's in-house processes, the transaction may or may not have been presented to their internal decision makers. In a tender process, a lender may issue a term sheet to get a seat at the table for the next phase of the loan application process. But at this point, the lender actually has no obligation to fund your project. In recent times, HoldenCAPITAL has witnessed firsthand various lenders, including major banks, withdraw or materially change the indicative terms within the term sheet that has been issued. Credit approved term sheet. These are sometimes issued, mostly by banks, to at least demonstrate that the loan application has been presented to their internal decision makers. Once again, this document doesn't represent an unconditional approval. It merely highlights that the lender's internal decision makers have indicated a willingness to consider the proposal on the terms set out to them by the frontline team or the business development executive in question, who's been representing the borrower's case. Effectively, they're endorsing the term sheet. However, it again includes various disclaimers confirming that the lender is in no way bound to provide the funding. Letter of offer. This is issued as confirmation that the internal decision makers have formally approved your loan application. And the letter of offer will still include loan conditions that must be satisfied by the borrower, which fall into two categories. Conditions precedent, which are to be satisfied prior to financial close and/or the first monetary advance, and conditions subsequent, which have to be satisfied by an agreed date or post the first drawdown. But you need to still remember that the lender can reserve their right to withdraw their offer in the event they identify an issue that they think is prejudicial to their position. Once the borrower has accepted the letter of offer, the lender will then instruct their lawyers, which can be either in-house or external, to draft the necessary loan documentation. Only after the borrower and any guarantors have executed all loan documentation and satisfied all conditions precedent to the lender's satisfaction will the loan actually be available for drawdown. I hope this video has been helpful, and to download more detailed summary of the topic, please click on the link below.
To find out more, contact the team at HoldenCAPITAL.